Sunday session. And give me 1 second. Okay, good. We are still recording. Just wanted to make sure that we were still recording this as well, because I do put these up on YouTube and a couple other places as well for you guys to review during the week. It is a pleasure to be here this Sunday. And we have a very special group of guests in here. Let me check for the last one. Mike, good to see you here, buddy. And awesome. So before we begin, if you guys can hear the sound of my voice, go ahead and give me a chat in here, Y or yes, to let me know that you are good to go. Awesome. Silas, are you in as SP or your name? Because I got you as both, and I made you a co-host on the Silas P. Martin says loud and clear. Dinesh says good to go. Michael, thank you. Martin, thank you. Fantastic, everyone. It is May the 4th be with you. I guess if you are a Star Wars fan like I am as well, it is that day. But we have a very special day here today. Today, I don't see Hubert in yet, but he may join us toward a little bit later if he can. I know wishing him well because I believe he just became a grandfather. Okay, SP, gotcha. But we do have Tyson Clayton, Silas Peters, and Mark Helwig that are going to be joining us today in this roundtable discussion, talking about all things markets and what we are looking to do, where the market is potentially going to go, and some just tips, general tips for you as you kind of go into your evolution or through your next evolution as a trader. Now, before we begin, I got to let you know first and foremost that we're not commodity trading advisors. We're simply here to show you opportunity. What you guys do with that opportunity, that is all up to you, as well as you have to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. And anything that we cover here today, just know if you decide to take any of those trades, know those are of and on your own volition, my friends. And a couple of other quick things for those of you guys that don't know who I am. Maybe this is your first time hearing me speak because you haven't been into a webinar lately for any individuals, but I wanted to quickly introduce myself. My name is James Bishop. Have my MBA in global portfolio management. I also am a founder of a managed fund. I also own a retirement and estate planning company. I'm working on my doctorate. I'm in the final stages. It's officially official. I am now entering the dissertation phase. So just, a nice little 150 to 200 pages of typed information, all from my brain, and contributing to the body of work in this world, the body of knowledge in this world. That's a dangerous thing to say I'm going to be a contributor to. And Ronald, it'll be about an hour, no longer. But you're going to want to stay, Ronald, because I'll tell you this, and I'm going to go ahead and let you guys know this. At the end of this presentation, I am going to be asking, and they know this, that at the end of this presentation, our panelists are going to give their top 3 picks that they should be paying attention to, that you should be paying attention to right now. Whether that's stock picks, fundamental news, whatever it may be, they're going to share those top 3 things with you. Now, with that said, I want to go over, as always, the purpose of why we're here together congregating this Sunday evening. One, it's to help you guys gain market insights, showcase some of the tools that we use. As you see, I already have trades trending pulled up. I've already been doing my analysis as where I think, what I think next week could look like for us based on historical views. I already have my charts pulled up as well. I've been talking with Tyson about this newer, cleaner, in my opinion, I can say that to him, cleaner version of Vortex, and even how it interacts with Mark Helwig's Market Energy, as well as just taking a quick gander at Market Energy as well before this session. And we're going to talk some economics. We're here to also learn from you guys as well. Now, to dive into it really quickly, I don't want to take too much time from our panelists, and I don't want you guys to leave without this information. that I want to share with you guys as well. So our panelists are going to be coming up in just a minute. But first and foremost, I want to go through what happened last week and what you need to be looking for this week, okay? So last week we saw job openings are lower, okay, and they were revised lower the previous time. Consumer confidence came in lower than expected, and it was slightly revised higher than the previous, right? The previous was 92.9. They revised it higher to 93.9. We came in at an actual 86. This is the lowest it has been prior to COVID. All right. Then we had advanced GDP. Now, there was an expectation that advanced GDP quarter over quarter, we were going to grow by 0.2%. Not a lot at all, but some growth. However, we have seen negative 0.3% growth. Okay. Then we had Consumer Price Index, the PCE Price Index. This is the measure of inflation that the Federal Reserve uses when determining what to do with interest rates. And right now, it's at 0.0%. What that means is that prices have stopped inflating for that from 1 year ago in April of 2024 to April of 2025. Looking at those 2 months, that means that prices have flattened on those from last year April to this year April. Pending home sales came out at 6.1%. I'm going to go out on a limb here and say I expect a revision in that, mainly because if you look at existing home sales, number of mortgage applications, they're way down. So I don't understand how that would be up, but hey, maybe I'm wrong, right? Maybe I'm wrong. Then unemployment claims was higher than expected. Look for that number to rapidly increase in June and July because all of the government jobs are not reporting until June or July when those government jobs were, closed, when those institutions and I was going to say organizations. I was about to say businesses, but it's the government. When they were let go, they don't report that until June or July. So that's when you need to report that. And then we saw non-farm payroll come in better than expected. Average hourly earnings slightly worse than expected, but the unemployment rate fell flat, and that is because of a major revision, right? We revised down from 228,000 jobs down to 185,000 jobs. And this time we reported better than expected at 177. So really a mixed bag of announcements, which is going to lead to next week. Right? Next week, not a big news week next week for the United States, but Wednesday is going to be, and I'm letting you guys know right now, if you are not experienced with volatility, if you are not experienced with things like that, just know, my friend, just know that Wednesday is going to be that day of major volatility. I don't want you to get shocked by this or anything like that, but I want you to be prepared for it. Wednesday at 2 o'clock, if you're up in some positions, maybe think about putting in some protective stops. If you're down in positions, maybe think about, putting in cutting some losses, if they fall down further. Those are things that you have to think about and judge for yourself because FOMC is going to be a hell of an announcement. I'm not expecting the rate to change, right? As a matter of fact, let me show you. The CME, they have a Fed Watch group, which includes a lot of the voting members of the Fed get to disclose information here. And as you see, 96.8% probably just going to hold rates. Guess what? I expect the rates to hold as well. Now, who knows what's going to happen from what announcements will happen post that. Or I should say, what announcements from the governing bodies will happen post that. I'm sure everybody will have their opinion, but this will dominate the news headlines. But I'm more so interested in the 2:30 p.m. press conference this Wednesday, May 7th, because that's where I think we will get the plan, the vision outlaid for us. And if one thing I can tell you about Jerome Powell, Whether you like him, you love him, you hate him, I don't really care because this is the truth about Jerome Powell. During COVID, he told everybody exactly how he was going to raise rates, and the news was shocked that he followed through with it every time he did. When he started cutting rates, he told people how he was going to cutting rates, right? And we will and he's cut rates the exact same way that he told people that he was cut rates. So David said, "Hey, isn't Trump pushing hard for a decrease in rates?" Yes, David, it is. He is, but the Federal Reserve and the FOMC, they're an independent organization. Even though federal is in the title, they are not part of the federal government. And the president has no jurisdiction or has no say or rule in what they do. They are an independent panel of bankers that get to make those decisions. Any other questions about the major news here right now? Really quickly, because now is we're gonna bring on our roundtable guests here tonight for tonight. And I want to first start by asking them all to introduce themselves, talk a little bit about their favorite markets to trade and why. And then for each one of them, so that's you, Mark, you, Tyson, you, Silas, if you guys want to come off mute right now, and you can stay off mute so that way you can jump in and jump out whenever you feel like it. And I'll start with you, Mark. So I would love you to introduce yourself, talk a little bit about your favorite markets to trade. And then the question that I've always gotten as a someone who used to help clients one-on-one is why do these analysts even bother to teach other people if they're so successful? So why do you love to teach people, Mark, as well?
Yeah, James, thank you. Great to be here, everyone. So my name is Mark Hellwig. I'm a hedge fund manager for 20 years. And in terms of, let's see, your questions, James, you were asking me.
Your favorite markets to trade?
Oh, favorite market trade. Thank you. So I would say probably in NASDAQ futures and S&P futures. I think futures in general
Okay.
are markets I really enjoy. And it's probably because the continuity of the trading sessions
Okay.
was nice versus gapping. But I also enjoy trading options as well. But
And then
and
why
then
do
why do
you
I
trade?
teach?
Yeah, why do you teach people to
So
trade?
both my parents were teachers, so lifelong teachers, and so I think there's a lot of benefit and reward. I consider myself to be a student of the game, always will be, and so I enjoy interacting with a lot of you guys and get a lot of great ideas. So I think it's iron sharpens iron when we get together and share what we learn and different ways to trade the markets. And there's 1,000 different ways to do it, different ways to approach it. I always think it's really beneficial to do that. Enjoy doing that, and certainly with James and Tyson and Silas here, and Hubert as well. So that's what I enjoy doing quite a bit.
Love it. So, Silas, if you want to come off mute here, it's kind of the same questions for you. If you want to introduce yourself really quickly, your favorite markets to trade, and then why do you like teaching?
Yeah, good afternoon, good evening, everybody. Thanks for having me on. Name is Silas Peters. I'm the founder, head trader of Trades Trending, and my primary focus is in the futures markets as well, S&P, NASDAQ, 30 years, crude, gold, and currency futures. It's where a lot of kind of echo what Mark said, trading around the clock. That's where a lot of the institutional activity is. Major liquidity, trading 23/6 allows us to get in when and where needed. As far as teaching other people, really never planned to, honestly. Had no plans on doing that. Started getting requests from friends and family and some other colleagues that kind of got me in the teaching part of the business, and I've really found that it's been a really rewarding experience and process. Too many people. I mean, I think we all know here that trading is not easy, and too many people are struggling, continue to lose money, and it's been really a self-fulfilling process to watch others succeed. And truthfully, it holds me accountable in a way that I never would imagine, and it's helped me become a better trader.
Awesome. That's awesome. Love it. And now, none other than Tyson Clayton, someone I've known for a long time in my life. I could probably answer this for you, but I'll let you do it. So introduce yourself, your favorite markets to trade, and why you love to teach people.
Yeah, thanks, James. And great to be here with Silas and Mark and you, James. Happy Sunday. Hopefully everybody had a great weekend. I've been doing this for about 24, coming up on 25 years. I'm the founder, head trader at Invest for It. I trade options for the most part, stock and options, but I pretty much trade everything. I kind of envy my colleagues, Mark and Silas, and probably a lot of the students in this room. I love the idea of futures, but I need something that I can set the trade up and then just to step away. Actually, when I'm intraday trading, when I have access to something 24 hours a day, 7 days a week, or 24 hours a day, 5.5 days a week, I'm going to make mistakes, and that's the main reason why I trade options. I do a lot of trading that takes a couple days for those to play out, but that actually leads me to the reason why I teach. I teach because I love this business. This business, I think, is all like the core desire that all of us have in this room is this innate desire for freedom. And but I also know there are attributes about myself, personality wise, that actually get in my way of successful trading. So being around other students and trading, sometimes we know the best things to do. We know how to do what is right. But when you're in your, by yourself in your trading room and all you answer to is yourself and maybe your wife, but it's easy to break the rules. But when you're teaching and you're in front of other students, you guys help me as much as hopefully I help them. So that's one of my main reasons. So kind of echoing with what Silas and Mark had already said.
Yeah, absolutely. And I'll go ahead and say this too. Look, I was not a huge options trader 10, 12 years ago, maybe even 15 years ago when I first met Tyson. And I, owe Tyson a lot of what I've learned about options and equities from him. And then I've taken it on the equity side even further in the fundamental basis, but from a technical standpoint, I owe a lot of what I learned is from Tyson. I think that futures. Maybe you do options on futures, Tyson. That's a possible. You can do that. Make a lot of money.
No,
doing that
that's
too.
a thought for sure.
That's a thought. So we may just create a new course, guys. So know that right now. I kid everyone, but the first thing I want to get into is probably what's on everybody's mind. We have seen this market bounce back and forth like a tennis ball at Wimbledon. I mean, it has been insane. I'm going to just bring up the SPX here really quickly, and I'm going to take that off for a second. We've seen on a daily time frame this drop in from February 19th to what was that? April 7th, we saw a 21% drop. And then from that low to now, we've seen about a 17.6% pullback over from, April 7th to May, what was that? May 1st or 2nd on Friday? What do you guys think is the biggest threat to the market right now? And what do you see as the biggest strength to the market right now?
Want me to kick things off?
Yeah, absolutely.
Yeah. I think it's actually for me, it's kind of the American resilience. And I look back at other situations and other times in the markets, and I think the strength is also the weakness. And that sounds kind of cheesy, but I think it all boils down to consumer confidence. There's this acronym I used to use. I used to say JICJED, which is JICGED, which just stands for jobs, income, consumption growth, earnings, and then distribution of those earnings, whether it's through, higher multiples or dividends. And that's all from you and I. It's all from you and I going out and spending. And so if the human spirit continues to say, hey, we're going to get through this, we wake up every day, we find ways to look at and turn things into, it's kind of the power of positivity. That sounds kind of cheesy, but I think we're going to be okay. If we don't, then I think it's going to be bad. And so I think the biggest strength that we have in the markets right now is our resilience and our history, and the markets do go up over time. The biggest weakness is that can be fragile at times. And I think it all lands. We fast forward 6 months, 9 months down the road, and we're going to go wherever the consumer confidence goes. That's my opinion.
Gotcha. Silas, same question. What do you think the biggest strength in the market is, and what do you think the biggest threat in the market is right now?
Yeah, I'll keep it a little bit more shorter term. Thinking is like the biggest threat right now, I think, are going to be revolved around tariff headlines, possibilities of recession. As far as where we are in the current state of the market from a technical picture, I think I'm just talking opinions here. I'm a little cautious about the indices' recent run, having closed higher for 9 consecutive days. In my view and my experience, in my opinion, markets really can't sustain such a relentless climb without a healthy pullback or consolidation. We no longer prices stretch in one direction, especially after such a streak that we've seen, the greater the risk of a sharp reversal or even possibly a broader failure. So I think if for a more sustainable bullish trend to take hold, I think the market needs a consolidation phase, a period of sideways movement, or even a modest dip to kind of reset, build a stronger base before pushing higher. It just right now, the bullish momentum feels a little strained after a 9-day winning streak. I'm just skeptical of where we are in terms of price right now. So that's kind of my short to intermediate term viewpoint. I think, biggest strength, though, a little bit of what Tyson was saying, there's just general investor optimism, seeing stronger corporate earnings that could provide favorable tailwinds. And obviously, with the environment we're in now, any positive talk of tariff deals, that's going to likely, provide support or a bid in the market. I just think knowing who's behind this recent move, it's more retail flow rather than institutional flow. So that can swing the pendulum 2 ways.
Hey, Silas,
I agree 100. Just real quick, I 100% agree with you on that short-term thesis. I think that we're at kind of a line in the sand area where if we've got to clear and close a weekly close a little bit higher before I start to buy in this. But I agree 100%. Look for a little bit of possibly a complete correction of what we've just seen. But yeah.
Hey, and Silas, really quickly to follow up on one of the things you just said, you saw the institutional flow. Is that from your program Commitment of Traders, COT?
It's a combination.
Okay.
Right now, the data is mixed across the indices, but we're seeing CTA flow, CTA buying, expecting more CTA buying because they're following trend following programs, right? And they have buy programs that kick in, but a lot of the larger actual fund buying has been on the funds have been on the sidelines.
Gotcha. Okay. And Mark, so same question to you. What do you think the biggest strength in the market is right now? And what do you think the biggest weakness in the market is right now?
That's a good question. Well, I think I agree with it. I think that's been said so far. But the one thing you have to watch for, I have to say, I love the direction that we're going here. It's really interesting in terms of the just potentially abolishing the IRS and going with the External Revenue Service. It's an interesting possibility, and it takes you back again. We've heard the government talk about and the Trump administration talk about what happened in the late 1800s, early 1900s, and so with tariffs. And so it's going to be interesting to see where that could go and how that could work out. But I think if the government if they took tariffs and did not eliminate taxes, then that creates a problem. I think the biggest threat right now, though, is uncertainty. So I think we've got to get past this period we're in right now and lock things down. And uncertainty causes investors to freeze up, and that's the worst thing in the world to have happen. So we've got to get it so everybody understands. I think the big investors, especially the really high net worth investors out there and VCs and companies out there, have a very high comfort level with the way things are running, with the rules of the game, if you will.
Yeah.
So that's it. Yeah. And then consumer, just a consumer right now, And the reason why I like the idea of easing up on the income tax is really for the consumer. Consumer's not in very good shape right now, and so that would be obviously really good to see. But so I think that's something that has to be addressed for uncertainty, if you will, or a threat. It's in terms of getting things more business friendly, the strength of what could happen here. I'm a big pro-capitalist guy, so anytime you make regulations more friendly, I think make it easier to do business. I think that's good, and I like all the companies that are looking to bring manufacturing back to the United States, and so there's a lot of good things happening there, but they may be slightly longer term. So it's going to be interesting, but I like what's happening. I think we've had a lot of storm clouds over the past couple of years, and we've got to address these things. They're not new by any stretch, but it's interesting to see where things will go, and that's what I'm watching for, more or less.
Gotcha. Yeah. It is interesting. I mean, not to draw the only parallel, and I'm going to say this, and it's going to sound a certain way, but it's not meant to sound a certain way. But Herbert Hoover was, president right before the Great Depression, and a lot of what he put through kind of helped fast forward the Great Depression. Onshoring manufacturing, tariffing the world, tariffing 200,000 products. Because what we saw back then, if you just study just the basics of what you saw companies do, is they would make a promise that, oh, we're going to bring back manufacturing, and never give the win, and never put a shovel in the dirt to build the plan. And so that's the nervous part of it, right? Perhaps we get somebody in there that forces it, or kind of pushes that envelope further. And then, like you said, he wasn't trying to cut taxes at the time. And so if you get rid of taxes, I can totally agree with you on your thought process there.
Well, the other thing also throw in there, James, if I'm not mistaken, Herbert Hoover also cut down the size of the government quite a bit as well.
So his goal, well, the government was smaller, but already it was way smaller
ours is
than
massive.
it is today.
Yeah.
And then he cut down the government, deported it, got rid of immigration, stopped immigration pretty much, and then tried to onshore manufacturing, created the Fred Smoot Act that was passed through Congress, because at the time the president did not have tariffing powers. It was Congress that did, and then it got switched post World War II. But prior to that, the president had the Congress had tariffing powers. And so the Fred Smoot Act created a 10% tariff on the globe, and then specific higher tariffs on 200,000 products. I got a textbook that would bore you to death if you tried to read it, so I won't even bother mentioning it. But I read it. Literally is everything that happened from 40 years prior to the day in October of 1929 that caused the stock market, that created the environment for the stock market to crash. Every little thing. And then what created also, then it goes post World War II, what created the manufacturing in the United States was a really just unique, opportunistic time where China wasn't on board. Japan and Europe were the only two major manufacturers in the world at the time, and both of them were rebuilding their countries after the devastation of war. So manufacturers were forced to move somewhere, and at the time, the highest skilled labor was in the United States. And there's a whole host of other things we could go down on a road of.
Hey James, can I mention something though?
Yeah.
I think it'd be remiss if I didn't say it. Like I agree. Listen, I'm a hardcore free market capitalist, and I'm an American. I'm proud to be an American, but we do have an issue that needs to be addressed. I don't know what the solution to it is, but the largest employer in the entire world is the U.S. government. When we start to cut the government, people are going to have unemployment's going to go up, and where are those jobs going to be filled? We're moving into this giga economy, this AI economy, and I think there's going to be a skills gap, and there's going to be a lot of people that may not be able to find jobs. The other problem that we need to address, and this is, I don't think there's any other time in history that we can even talk about this, is okay, great. I think it sounds cool to build everything in America. That sounds awesome. It sounds like that's going to provide jobs. The problem is the fact of the matter, if I can build, and again, I'm just going to use hypothetical numbers, but these are facts. I can build an iPhone for $300 in China, and that same iPhone is going to cost me $1,600 to build it in America. That's just a fact, and it's because of our standards that we've set for ourselves in America. So unless we are willing to take pay cuts or have massive tax decreases, which is what is needed, this is going to be very painful. And I think everybody needs to understand that. And again, it's not to get political. I think Elon and Trump have actually tried to, in a way without destroying the markets, tried to warn people that this is going to be very painful for a long period stretch, or at least a little bit of time, because of these facts. We're gonna have to cut. There's gonna have to be, I think, an adjustment in the lifestyles that a lot of people live, adjustment in the expectations of incomes, because that's the only way. If we bring these manufacturing jobs over, and at the same time, these companies' earnings are going to be decreased. They're going to start laying people off, and not only are they going to lay people off, but the cost of the goods and services are going to absolutely skyrocket. So, those are just facts.
The couple of points that you just made there. One, the largest manufacturer in the United States is China now. Foxconn is the largest manufacturer. They now have 4 auto manufacturing plants, but they have the largest number of manufacturing employees in the U.S., which I think is just wild when you think about that. That's layers on layers there. But the other is Tim Cook. I was listening to a speech from him, and he was talking exactly what you just said: the $300 iPhone out of China versus $1,600 in the U.S. And then he had mentioned, he was like, if people think that businesses go to China because of labor costs, they're gravely mistaken. It is because there is a specific skill that Chinese manufacturing has that nowhere else in the world has. And they have reinvested in education and growing their skill where we have grown our consumption. And I just think that's a really interesting point that he made, because it is cheaper for iPhones to be manufactured in India, and half of their production is shifting to India faster than expected. And then you're seeing all sorts of different things happen from different companies, but it's a real big shakeup, and this is actually great that we kind of segued into, the third question I have. And I'm going to list some things that have happened, right? We saw that, and we talked about this earlier, 0.3% GDP, which is our gross domestic product, that just was announced. We have, layoffs that we don't know about. Manufacturing, imports are down. Imports are down 65% for all nations that we're importing from. Right? That's a wild number to see that. And then these two are a little more shocking, not as well known and underreported. I literally have seen none of what I call the letter channels, ABC, CNBC, all them report this stuff. But you have right now, there are 6.25 million people that are 2 or more months behind on their mortgage. To put that into perspective, in 2008, it was 6 million flat. So we've eclipsed that number, okay? Then there are 9.5 million people that are 2 months or more behind on rent. So that's total renters, whether it's apartment complex or it's renting from an individual or something like that. Given these stats that are there right now and these kind of current market issues, where do you think, and next week we'll know more about this, and so where do you think the interest rates and bonds are going to go, and how does that affect the market, in your opinion? And, I started with Mark, and so Silas, I'll let you start this one, and then we'll go around from there.
Yeah, so the question is just with the current market environment and these issues, what are the thoughts on rates and bonds?
Rates and bonds, yeah. And the overall market. Do you have a direction that you think the overall market may go?
Yeah, I mean, going back to kind of when we talked about what the biggest strength and weakness is right now, that line of thought is still in play. As far as rates, I think it'll stay elevated. Cuts could be. I think rates they're pricing the market is pricing in potential rate cuts maybe the second half of the year if the data continues to soften. But right now, with inflation remaining stubborn, I think that the Fed will probably be cautious about cutting rates too quickly. But as far as like hard numbers and GDP data and all that, I'll leave that to you, to the PhD candidates of the world, such as yourself. But I think, I mean, it's hard not to be cautiously optimistic because generally the market does continue to go higher, just like Tyson mentioned earlier. But I think there's going to be more. I feel it's going to be more choppy. I know we've got the V pattern and all that kind of stuff going on, but I think it's going to be more choppy. Strengths, if a strong labor market, if earnings continue to show resiliency, particularly there in tech, you still have high consumer spending, although they're seeing signs of that pulling back. And then the risk are, of course, tariff talk, geopolitical tensions, higher interest rates pressuring valuations, and then possibly earnings slowdown in the non-tech sectors. But I think I'm just going to focus on really be focusing on price.
Gotcha. I like that. Mark, same to you. Given these current market issues, where do you think do you think interest rates hold? Do you think they go up again? The Fed has talked about raising rates. And what do you think the bond market goes to? Because so many, as you know, working in the hedge fund world, so many retirement accounts are heavily invested in the bond market.
Yeah, it's kind of a tricky time a little bit. I think some really good points have been made, and you can't ignore the data you're looking at. In fact, with mortgage late payments and rents. And the thing that I don't like what's happened with that, and this is a hard part of just culture and society, but our government has been on the sly last couple of years, has been paying the mortgage for a lot of people and adding it back in their debt. And so that the problem with that is that usually ends badly. It prolongs what needs to happen when it's just, like the housing market. I think a lot of people are scratching their heads. Why hasn't not corrected more? And it's because it's been artificially propped up. But there is a problem. They're stopping that apparently pretty soon here. Again, I don't want to ever see anybody lose their home. It's not about that. But the free market has stopped being free a little bit from that perspective. But I don't know, James, if you saw the car data, a lot of people are getting behind in their car payments too. And just, not too long ago in Dallas, my family's driving around. I was shocked at how many really expensive cars there were just on average. And it's just beyond what most people can afford. So the average price car was insane. I mean, like $50,000+. The average person can't afford that. And the cars have gotten way, way too expensive. So to your question, what about rates and what about bonds? It's interesting. I mean, we're at a very interesting crossroads, I think, with a lot of things. And if energy keeps on coming down, the largest commodity in the world, crude oil, and I do believe it's bearish. I think crude oil is going to continue heading down. That should help a little bit with energy and costs. We start drilling more. And adding more supply. The United States has a huge supply of crude oil. If we tap into it, I think that would be good for the overall market. And we've seen gasoline prices come down quite a bit. So I think that what Silas was talking about, the markets factoring in some rates coming down, I do see them coming down. It'd be hard to imagine. I don't think they can raise them. It'd be really hard to imagine anything, in that direction. I think they're going to have to bring it down. I think we'll see the inflation data, especially if it's around crude oil and energy, start to soften a little bit. So that should, I would think, help things. But bonds there have been times, by the way, where bonds and stocks have gone down in history together. But bonds in the chart right now look a little bearish to me. And I think stocks To Silas's point, I hope they, at the worst case scenario, it'd be great to see them go sideways, that they're starting to form a very bearish weekly pattern, but it's really also strange a little bit too. So, but it's possible the bearish weekly pattern could, if it plays out, we could see a pretty big sell-off here in upcoming weeks, on this bull. So I've been bullish lately with this last couple of days and the patterns there, but I think it could be trading into a more bearish weekly pattern on stocks, and we'll see if that starts to really lead to a power down cycle on the weekly basis. Then you can see prices drop quite a bit.
Yep.
If they hold steady, then it's going to be interesting to see how that could transition from a technical perspective. So, and I'm not giving you a lot of super clear answers, but I think energies are going down. I'm still bullish on gold longer term. I think the stock market is right at that crossroads. It'd be interesting, and I think there's a pretty good chance that stocks could correct if this turns into a weekly bearish power cycle. We could see a fairly sizable down move here.
Yeah, absolutely. And I agree. And there's, as you know, and I try to explain this to people in every week session. This is the black line's a 200 period moving average. The red line's a 50 period moving, and the blue line's a 20 period moving average. We're still in the death cross, right? And just because we pulled back does not mean it can't go lower, right? And we've seen that time and time again on bullish cycles. But I always tell people one of my favorite things I've ever learned in the market is from a good buddy of mine. He said, bulls climb stairs and bears fall out of windows. So when this thing falls, it'll fall mighty, mighty fast, I think. So I agree with your sentiment there. And Tyson, to you, same sentiment. Where do you think, we see with interest rates, bonds, and kind of the overall market direction?
Yeah, so I just want to be very clear. Like I am about as bearish as you can be in the stock market right now. I think this is a fool's rally. Maybe I'm wrong. Good thing the strategies I trade, I just need movement, so that's good. But the problem with everything that you typed out there is the thing that hasn't even hit yet is unemployment, and whoever wants a job has a job. Imagine when they don't have a job, how bad things are going to get. And if you don't think that that's going to happen, well, there's already layoffs that are starting to be planned and announced. And then what happens if the cost of building their goods and doing their services go up, and they still have a board that they have to answer to, these corporations. I promise you, one of the first things that goes, especially because of AI, is my son and my aunts and my nieces and nephews, their jobs. It's jobs, guys. So that's not good. So what does that mean? I think bonds are good. I think interest rates are going to go down, dramatically go down. But I think, Mark, this time it's going to be for real. It's going to be because of baby boomers actually taking profits from the stock market and going into the safety that they should go into. And so bond rates are going to come down dramatically as the stock market falls dramatically. So the TLT rallies, the SPY sells off dramatically. How far? I don't know, guys, but I think I'm more bearish right now than I have been in maybe forever. So
to your point,
TLT up, SPY down. Long term, here's the deal: we're going to be okay. Either the Lord comes back and hallelujah, or America's America and we're the greatest, and we come out of it, and you buy good stocks on the cheap. So.
Yeah, just a quick comment there, Tyson. The flight to quality certainly is a real thing. So if that kicks into gear, like you're saying, I mean, I could see that pushing bonds higher, rates down. Yep.
And I do think that there's still a very big cohort of people that are still way too long risk assets that have not went into safety yet with those baby boomers, Mark and Silas. I don't know if you guys have an opinion on that, but I think that that's a really big story that has not been talked about or written.
Yeah, I think that is so. It's funny you talk about that, Tyson. I was discussing that with my advisor for my dissertation, because we're in that greatest wealth transfer in history right now, right? It happened 100 years ago, and it's about to happen again. But there's two ways wealth can transfer. It can transfer from those that went, short, and those that got out of the way of the market falling and got out of their positions at points like now. And then there's the other and then there's the other people that just, everything's great. The stock market only goes up, and et cetera, et cetera, et cetera. And those individuals usually part with their money to the people that were kind of on the sidelines, which end up are the BlackRocks and the Blackstones. Now, something else that this is going to be one of the most shocking statistics, and I know I've told Tyson this as
Hey,
well.
before, unless this is to say that before we come off the baby boomer thing, is it in the same vein?
Yes, it is.
Okay, good.
Yeah. So it's still in the baby boomer vein as well, and it has to do with real estate. So, a lot of what I hear in the news, and you guys in the chat right now, tell me, have you guys heard about, hey, we're underbuilt. We don't have enough homes in the US. We don't have enough single family homes. We don't have enough homes, right? Have you guys heard that? Give me just a yes if you have. With home prices and things like that. Yep, yep, yep. A lot of people are saying yes, absolutely. So here's the thing. So I have access to certain tools that not everybody else does, and I get them because of the university that I'm with. I help run an endowment fund for the university. And I was just looking at home statistics in the US. I looked at home vacancies, number of homes listed for sale, okay? For sale by owner and listed on MLS, total 902,000. There are 15.96 million homes that are sitting vacant. Something like 10 to 12% of those 16 million homes that are sitting vacant are owned by hedge funds and institutions. The other largest group of home ownerships that have vacant homes sitting are the baby boomers. 20% of the population owns 38% of the real estate in the baby boomers generation. And then you may not even know that you're invested in it if you are in a 401k or an IRA that is invested in Blackstone or BlackRock or in the real estate ETF or something like that. You may not even know that you're a part of that. And so I think you are exactly right, Tyson, with the baby boomer generation. Like, hey, you guys are here because if you are in that generation and you're 10, 15 years from retirement, you're in this webinar tonight for not because it's serendipity, not because it's irony. You're here to learn, and it's something that you just want to pay attention to. I'm not telling you what to do here, but I'm going to talk about an opportunity later on that. But Tyson, what do you want to comment on?
Yeah, just the last point I wanted to make is that one thing we need to recognize too, and I hope that everybody in this room, that if you fit in this category, I know quite a few people that fit within this category. Is again, baby boomers, I think, are, if you look at the historical risk gauge of what somebody, the age of 55, 60, 65, 70 or older should be, where you should be allocated. I believe that the risk gauge is way out of whack compared to what it should be right now. And I think that changes over time. And again, what that means is those baby boomers going more into cash, CDs, bonds, and going, I guess, more defensive, which should rally up bonds. But the other thing we need to keep in mind is, I don't necessarily think we live healthier lives by any stretch of the imagination, but we do live longer. And so that also is a very big contributing factor of how long is this wealth transfer going to take. It could take a lot longer than we think. So again, I think I see interest rates lower for longer, and I see stocks maybe lower for longer. So that's the thesis.
Tyson, if you don't mind, James, just chiming in on the wealth transfer. But one thing that's really interesting is largest wealth transfer in history. I don't know if it's 63 trillion or whatever it is, but what's interesting is I was talking to an executive from one of the major brokerage houses, and he was saying that the thing you've got to remember about that wealth transfer, it's very narrow. Mm-hmm. So he says, it's not like the masses are getting it. He goes, it's a
You're
pretty
right.
narrow.
Yeah. It's the big gap between haves and have-nots. Yep.
Let me actually show that. Actually, so this is a
which isn't good. Which also leads to the whole thesis that we're building here, which is like, be a little careful.
Good.
Yeah.
So this is a slide just for everybody's own edification here that I'm actually using for my dissertation, which is. So this is the change in wealth gap over the last, at the time it was 10 years, right? I made this last year. So in 2014, the top 10% of wealth holders in the United States had 54.25 trillion, and the bottom 90% had 54.37 trillion, which is about equal, right? In 10 years later, the top 10% had $101.62 trillion, and the bottom 90% has lost right around $4 and some change trillion. And that just shows you there's a massive gap, and there's one actually major thing that separates them. And I don't want to get too detailed in that, but I'll invite people, all of you guys. I'm going to send you guys a link for a webinar later on this week to join in a special presentation where I'll discuss a little bit more about that as well. But
By the way, join that webinar that James is going to send. But that graph right there, if you're, and again, I'll say this politically, if you're wondering what Trump's agenda is, it's very clear. It's to make that more balanced. That's what he's trying to do.
Yeah, absolutely. I could unsee that. Last question on the market, and then I want to get into, we are going to get into your picks at the end of this, but I want to get into a little bit about your psychology and how you overcome certain things, because I think that's a big underserved area when it comes to traders. So last quick question, and this is just, a very simple thing. So AI and crypto. I know we have a lot of individuals here that are invested in cryptos as well as AI and looking to take advantage of that. And I want to offer this for perspective. Throughout history, any new tech, railroads, dot-com bubble, you name it, there was an explosion of companies that went public. There was an explosion of opportunity. There was an explosion of every week. It seems like a new AI or a new crypto or a new this or a new that is the hot new thing. And it was the same way throughout history with railroad companies as well as car manufacturers. At one point in the United States, there were over 2,000 car manufacturers. And now there's 3. So do you think that we'll see the same consolidation in the AI crypto boom / I don't want to call it a bubble yet, but bubble maybe? Is there 3 that you're kind of paying attention to more than others? So Mark, I'll let you lead that one off.
Yeah, it's a really interesting point you bring up, James, and that is new technology is hard to understand. It's hard for the market to get around, their minds around. And it reminds me of radio in the 30s, where if you think about the concept of listening to music remotely with nothing plugged in outside of, the concept of radio was revolutionary, and radio stocks took off. And so then they came back down to reality, and as people started to understand, okay, wait a second, this is not a boundless technology. There are realities and real physics involved in terms of at the end of the day, you've got to be profitable. So I was actually watching some AI capabilities last night. It's pretty incredible what's possible, but how do you make money from it? And there's tremendous energy costs and costs that go along with it. So it's going to be interesting to see. I do think what you're talking about, James, is going to be, it'll come back down to reality at some point in time here. But it's pretty amazing what's possible. But I think the question at the end of it is how do you make money from that? And I think there are a lot of ways to do that, but I'm not sure if it's going to be as many as people had in mind. So I do think it's going to come back down to reality or the earth here at some point. Although there are a lot of exciting developments that are happening.
Gotcha. Silas, your opinion there?
Yeah, I think the best comment there from Mark is that how do you make money from it? I don't really have any specific thoughts on this company or this company. I think it's too hard to predict with how fast things are changing, and frankly, I just don't keep up with it that much. I'll trade it, and try to profit from it, but I believe in it. I think just like everything else, there will be some consolidation. Companies will come and go and probably keep popping up like cockroaches and get bought up. And, I don't know who's gonna be there, when the dust settles, but I think having exposure in some form or fashion, to the major names that everybody knows and or having exposure through just a basket to hedge your risk, because some of those companies may not be around, some of them will explode. And so, yeah, we have exposure to AI themes and crypto themes in some of the portfolios we manage on the advisory side.
Okay. And Tyson, yourself?
It's so there is a way to value Bitcoin based upon mining costs. Bitcoin's going to $1 million by 2032. It's just based upon the cost to actually mine it. That's what it will cost to mine a Bitcoin. It's simple math. James, I did this math back in mid 2016 and have
Yep.
not been wrong since. And I don't think I will be wrong unless electricity costs go down dramatically. But it's just based upon what's called a hashing, a mathematical equation that adds a level of difficulty every day, and then there's a halving process. So again, there is a way you can value Bitcoin. It's too big to fail. The three cryptos that I like the best: Bitcoin, Meta, and Google, because anything beyond Bitcoin, I think for us to think that a company like Apple or Meta or Google or something like that wouldn't go and gobble them up, and poach the developers and create their own better version, I think is just foolish. So Bitcoin, 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 and then find the best tech stocks to invest in.
Yeah. Interesting you brought up Google too with that. So I don't know, there's this younger guy, he's really big into crypto, worked for major tech. He's the youngest billionaire in US history. And he made it all in tech. And he was on there talking about Google's Willow. I don't know if you're familiar with Willow. It's a quantum computing chip, and it's so complex that no one really truly understands it. They estimate it that it can process 1 septillion number of years worth of data in a second. And it is actually advanced enough to hack Bitcoin's unhackable hash rate. And I was like, wait a minute. So you're telling me that it can be hacked? We just didn't have the computing until some evil genius in a layer probably created this. So that's too far for me to get into it. And I'm not bringing it up for anybody, but man, if that was the case, that would be a whole craziness.
That is nuts. Real quick, I'm going to hedge my bet here for a second, right? So Bitcoin's going to 1 million, 2032, simple hashing, simple mathematics. Do some research on Bitcoin mining costs, and you'll see it's actually fairly easy to track and understand and
Yep.
kind of see where the math comes from. However, it could also be a big time Chinese psyop, and we could all be screwed. I don't know.
Yes, it could go to
One or the
million or zero. I love it. No, I'm not starting a Bitcoin crash. None of us are. I love that. I love that comment. It'll go 1 million or it'll go zero somewhere, or it'll be somewhere in between. We don't know yet. All right. So now I just want to get into one or two ideas here. So let me just ask very simply, how do you manage your emotions in high market volatility or after a series of wins or losses? Silas, I want you to lead off on that one.
Yeah, absolutely. Unfortunately, I've got to bounce here in a couple minutes,
Okay.
but I'll drop my ideas too. Fortunately, through time and experience, my emotions pretty much stay the same. I have a fairly mechanical process all the way from entry to exit in the way I hold the position. So emotions, yeah, I mean, I think it's probably impossible to eliminate all emotions when it comes to trading. You still have those that flow through your veins. But as far as, periods of high market volatility, that emotional roller coaster or wave can work in two ways. It can cause fear if you're obviously on the wrong side of the trade, but it can also create excitement because that's going to create a lot of opportunity, and that's the way that I approach it. But as far as again, the emotions really stay the same because I know how I'm positioned. I'll adjust position size or strategy if needed. Holding time. I've got with what we saw back there in the first part of April. Not just across equities, but a lot of markets. I was like, I don't see anything that I really want to get married to right now until things start slowing down from a volatility perspective. So I've gotten, I still do I've always done a lot of short-term stuff. I do a mixed bag, but I've become more increasingly focused on the shorter term, being happy to take my wins, take my losses quickly and move on as opposed to trying to get heavily positioned one way or the other until things become a little bit more clear.
Gotcha. Mark, to you. How do you manage your emotions during periods of high market volatility or after a series of wins and losses?
Not everybody's going to be a cool customer like Silas. I think he's a very cool customer. I can tell you, I've never seen Silas rattled. So, but I think um, one thing that is really beneficial is to ask yourself what is the ultimate goal, and it's not to be profitable every day. Now, that may sound strange to say that. It's to follow your trading plan every day. So your trading plan, you've got to map that out. So with the hedge fund over the years, even they'll say in the best year we've ever had, we would leave during down days feeling great. And it may sound strange to say that because we had a positive expectation on the strategy. So I would say from a psychology standpoint, go through a visualization of really establish strict risk parameters, how much you want to risk per day or per trade. And as long as you stick to your guns and you've done your homework, and have a positive expectation in your strategy, then you want to feel good about sticking to your rules. And so the other part of that I'd say is visualize losing. If you're a day trader and you want to risk, like say $200, let's say per losing day, and you want to target $500 per winning day, just throw those numbers out there. If you hit $200, visualize hitting that and visualize walking away and feeling good about it. That's what people never do, but it's time well spent because that's a win. If you stick to your strategy, it's a numbers game. You're not going to be up every day, and be realistic about your expectations. So if you align with realistic expectations and do a visualization of you losing money, hitting your trigger, and saying, I'm okay with that because it's part of a larger set of rules that lead to success. So that's what I'd recommend along those lines.
Love it. Tyson, for yourself?
Yeah, that's brilliant. I actually gave my niece the same advice. My 11-year-old niece just a few weeks ago, like visualize the worst. What's the worst case scenario? I'm a big fan of visualization of worst case scenarios, walking yourself through that. So I love that, Mark. I am the least cool of the cool, calm, and collected person of us. So I'm an emotional basket case. So I lean back on what got me to the dance, right? So and it's basically what Silas and Mark just said. It's so Mark says he maintains confidence because he has a positive expectancy, right? So it all starts with me. It starts with confidence in what I'm doing. If I'm confident in what I'm doing, I have the conviction to actually push the button and do it. And then if I've walked myself mentally through the worst case scenario. And so therefore I'm already prepared for it. If a loss does happen, and I have the tenacity to get my ass up and go do it again. So for me, it's confidence, conviction, tenacity. And then I love that whole visualization, like visualize. Don't just think of the rainbows and butterflies because the wins come, those are easy. It's what you're going to do in the losses, how you're going to handle those. And if you envision that before they happen, it makes it much easier to have that tenacity, get up, and then reset yourself back to the confidence level. So love that.
Awesome. And Silas, I know you said you need to run. If you want to just chat me directly on Slack, your positions, just let me know and I will put those in there for you. The positions and or things to look at for the market. I'll put those in the group for everybody to see.
Yeah, man, I appreciate it. You guys have a great evening. Thanks for having me on.
Yep. Yep. And just a couple more questions for the others. So the first question I want to talk about is actually it's an investment opportunity. So I want to share this with everybody that's in this room right now as well. This is I got an email late last month about a product and an investment opportunity. The key features about this investment opportunity is that clients will receive an immediate 30% bonus on the minimum income that they put in. And they also get a 9.5% guaranteed simple interest roll-up rate credited to them every single year that they do not take a income. Right. So an example of this would be, let's say example one is somebody invests 500K. And yes, you can use your 401k or IRA with this as well. You get an immediate 30% bonus. So you make 650, your account's now valued at 650,000. That vests after 8, 9 or 10 years, depending on the company and what we go with. Then you also get a guaranteed a $47,500 return as well, which is good as long as you are not taking an income. So if you didn't take an income for 10 years, you turn 500 grand into $1.1 million, and 100 grand, you turn that into $225,000. Now, this is all the while it's you still get the returns that are come from the stock market, but if the stock market falls, 20, 30, 40%, you lose nothing because it's a fixed equity index investment that are invested against Goldman Sachs, BNP Paribas, S&G, JP Morgan, those types of funds. So, Mark Tyson, I know you're still here with me. What are your thoughts on like somebody that's about to retire in the next 10, 15 years, taking a chunk of money and putting in something where they can get this type of guarantee and things like that? Is this something that people should be looking at, should have a conversation with, or what are your thoughts?
I think one question, James, that you could that I've heard people ask on these types of products is can you talk about principal risk for that? Because
Yep.
sometimes it's those are better than people think.
So that is the principal risk is 0%. These have a 0% guaranteed floor. It's in contract, in writing. I can share it with everybody in a one-on-one. I'll show them. You know, full disclosure, my parents and in-laws both have gotten these as well. And so a 0% floor means that if after your first year, if the market went up 10%, you gain that 10%, and that is your new floor. Meaning that if the next year the market goes down 20, 30, 40, 50%, you lose nothing. So if this plays out like the somewhat expectations that we still have further downfall to go, the people that invest in this now will lose absolutely nothing, and that will carry through for the rest of their life.
Hey, James, what about counterparty risk here
It-
with the companies?
Mhm.
Because I know people ask about that as well.
Yeah, so the counterparty risk is that they actually, because it's a fixed indexed and your money's not actually invested and the company is not investing the money, it's simply creating a instrument where large firms can borrow against the value that they have. That's the only risk that there is. And the companies that I put people in, they're not the type of companies that are, your, what is it, AIGs and stuff like that in the 2008 era. These are institutions that have been around prior to the Great Depression, and I anticipate will be around long into the other. And I always look for companies when I invest when I present these opportunities to people where they never took TARP money. So money in '08 that was lent to bail out companies, because a lot of these companies, some of these companies in this industry were bailed out by the federal government. The two in particular that I try to work with the most, they didn't take a penny of it because they didn't mismanage their books.
So James, you've done that homework. You can speak to that for anybody who's got questions, which is good.
Yep. And that's what I'm going to do is, but just what are your thoughts on that, Mark? Do you think like people, this is a viable opportunity that people should evaluate for themselves? Do you think, what are your thoughts? And Tyson, same to you.
So yeah, those are interesting products. They have been around for a long time, and I think it probably comes down to what your needs are and meeting. I would say meeting with somebody like James who can look at your. I think a lot of it is going to be predicated on your income needs from the assets that you do have. So I've seen people invest in these products just around recommendations to understanding what income needs that you have, and then around those points, if we do go into a secular bear market or do go into a lost decade, and these products pay out as expected, then they can you can be making potentially positive progress I mean during periods where the stock market may not necessarily be going higher.
Absolutely. Tyson?
Yeah, no, I
Yep.
agree. I agree, Mark. I think it's for sure. So it's all about timing for me. It's I look at something like this, and after if you do more due diligence, with essentially one of the, I don't want to call it gimmicks, but one of the things with this is it's when do you need the money? Anybody who is like, listen, I've got this chunk of money. I'll use myself as an example in a second here, but if I got this chunk of money and I'm pretty confident I don't need that for X amount of time, something like this makes a lot of sense. And I say that firsthand because I personally have a few Marcus accounts and I have a pretty substantial amount of cash in Marcus accounts making me 4.3%. So I've got multiples of hundreds of thousands of dollars in 4.3% locked up for 9 months. And there's a couple benefits to that. There's no pen. There's just a small loss of the simple interest in penalties, and it's fairly liquid. But what I'm giving up is I'm giving up some of that liquidity. What you're giving up in some of this is some of the liquidity, and you're locking that in. So that business, that company is able to utilize your capital then and go out there and arbitrage, because that's what they're going to do. If you're wondering how do they make their money, they're trying to arbitrage your money. They get $1 million from you. They're going to try to go out there and make 12, and they're going to give you 9.5. That's all cool. That's all fine with me, especially if I don't need that money for the next 9 to 10 years. And so as somebody who has a bunch of money tied up in a 4.3% 9-month CD right now, because I'm super bearish and want to be super conservative, something like this makes sense, again, but you got to look at those lock-in periods. But I think something like this absolutely makes sense, James.
Cool. Great. Yeah. That and the I love the arbitrage point that you make. And this is also, if you ever, just to clarify, if somebody ever needed income, let's say in the first 2 years, right? You just call myself and then bam, you just call me and we can turn on the income factor at that point. Now again,
the other
you
thing
get
real
that.
fast that
Yep.
you're giving up, because there was a point, I started to interrupt, but I just want to make sure there's a point here. You are going to give up some of the upside, but honestly, you look at something like this, and again, do the due diligence and meet with James and get. But you're talking about average market returns essentially on this, and so for me, I'm willing. Like, do I need a 30%, especially in my bigger money? Do I need a 30% gain? I'd be willing to give up some of the upside to cap, or give up almost all of the downside. That sounds pretty good for me for my longer term, bigger bucket stuff.
Yep.
But just know you will be giving up some of the upside, and that's okay, because that's what that company's taking on that and locking that in so they can get some of the upside. And because of that, they're willing to pay you a nice interest rate for that.
Yep, yep. And Stuart had a comment. The 10-year guarantee is only good if annual gains exceed. No, actually, Stuart, this is if your money's if the market makes nothing, you still get this 9.5%. If you make 3% in the market, you still get this 9.5%. This is a 9.5% guaranteed simple interest roll-up rate. This is 100% guaranteed. I can show it to you in contract. And I sent a link to everyone, and I will send it again here. Let's see. Somebody said,
if I was guaranteed to live the next 15 years, I would take a large chunk of what I have and have a conversation with James about this. Yep. 100%. I would do. I will tell you that 100% flat out. This is pretty amazing what I'm seeing here. Now, there are questions I would have, and I'd want to see some, the fine print and all that. But that's the only question. And again, it's a life insurance policy too. There's insurance attached to it, so there is a death benefit. But I'm not thinking about giving this. I'm thinking about how can I utilize this money in my good time in my retirement. So.
Yep. And then I want to let everyone know I just sent another calendar invite. What that does is you can actually book time directly with me and or one of my teammates. So I have a team of about 10 to 12 individuals that they'll be joining us on the meetings and stuff like that. Brent Birch was, a lot of you know him, that name. He'll be joining as well. So if you guys want to, simply use that link I just shared with everybody. You can book time directly with me anytime that I'm available. And if you don't see a time that's available, here, I'll even do you one better. Here is my direct email at Woodford. And if you need, if I can fit you in on another day, another time that I can move something around for you, I can definitely help you with that. So the kind of last thing that I want to get into is your top 3 picks. I'm going to go ahead and talk to Silas's picks first and foremost. His 3 major picks, and I'm going to write these out for everybody, we'll use this, commodities, and specifically the so agriculture and softs, right? And when he says softs, this is what he means: wheat, cotton, and then, so those are his two, right? Wheat and cotton. And then the other is, so that's two of them, and then energy. He said once things kind of firm up, he's really, really looking for, and economic conditions improve, he's looking for energy plays. So those are Silas's big three and big three opportunities. Tyson, what are your big three things that people should be paying attention to and looking at?
Yeah, I've got three stocks mainly because my favorite sectors. These are longer term plays. I think they're at good valuations, kind of sockaway stocks from my perspective. Except one's a little bit more speculative, but um, I think no matter where we go in the future, it's going to be right full of technology and communication. And I think the stock that embodies technology and communication better than any other stock maybe in the world is Google. So Google. Um, I honestly, I think you could buy Google now. You could buy it down 20%, up 20%, buy it for like literally it's, and again, this is not like me be like, oh, I'm just such a huge fan of Google. No, I think they're a conglomerate and they're kind of the scourge of the world in a lot of ways, but it's not going anywhere, right? It's so Google, great investment, long term, love it. It's gonna be hard for companies in the next 5, 10, 15 years to beat Google. They won't. Another one. This one's a little bit more. I don't even think it's speculative. The balance sheet is phenomenal on it. But the other thing that I am sold on is even if this tariff stuff does, we bring all this stuff back and we rebuild these manufacturing companies. There's one thing that is for certain: no matter where we go, we need energy and we need oil. It is what it is. Sorry, greenies. Sorry, tree huggers. It is what it is. And I think, Al Gore and AOC have been wrong in their predictions. I don't know if they've updated their predictions yet, but they've been wrong. So I don't know. Maybe there's a new prediction now, but oil's not going anywhere. MUR is the company. MUR's had got one of the cleanest, one of the most amazing balance sheets, and it's been absolutely destroyed. Pays almost a 6% dividend. It's been paying that dividend since like the 70s. And it holds a bunch of cash, no debt, big growth. It's super safe dividend and been absolutely destroyed. So MUR, Murphy Energy. That's, again, to look at the chart and be like, wow, how can you recommend that? That's a horrible chart. It is a horrible chart until it's not. So I like to buy quality stocks low. Maybe you like to buy quality stocks high. That's not what I do. It's not how I make money. So if you want to buy Palantir, go ahead and buy Palantir. Good luck with that. You do you. I'm going to do me, and I'm going to buy this stock, MUR. And then more speculative, the other thing that I think that we're always going to have, and no matter where we go, if we go into some massive recession like I think we're going to go into, you and I always still want to be entertained. And one of the things that I think entertainment is going to switch from you and I flying a bunch of places and going on these big excursions and big vacations to maybe we can't afford that, but you know what? We still like to hang out with family. And I think there's a company out there that I like a lot. And this is a speculative play, but balance sheet looks great. They hold a lot of cash. Growth looks good. And it's moving into a nice seasonal time for the summer and hurricane season. It's called HZO, which is basically a boat and watercraft dealership. And again, you're like, well, wait a minute, we're going to go to a recession. The consumer's going to get crushed. You think people are going to buy boats? Yeah, because they're not going to go on their big vacations anymore, but they're still going to want to be entertained. HZO is my speculation play. So Google forever, Murphy Oil for now and probably for a double or triple in the next 1, 2, 3, 4 years, and HZO as a speculation play up to probably 30 to 35 in the next couple months.
All right. And Mark, yourself?
Tyson, you've done your homework on those stocks, haven't you?
Yeah.
That's funny. Those are
I might be talking my own book. I am, by the way, talking my own book, just so everybody knows, is I do have positions in all these. Just full disclosure on that.
So yeah, no, it's interesting. So I think so mine's probably a little more plain vanilla. I think to the upside, I still see a lot of potential in gold mining stocks and gold miners ETF. You could consider GDX, and that's the gold miners ETF. Anglo Gold AU is one that's Newmont on the NYSE NEM are interesting as well. So they're correcting with gold prices coming down. I do think that this is a bull market that is a long-term bull market, and it's very young. So this bull market, it feels like it's gone up a lot, but in the grand scheme of where it could possibly go, we could be in the first inning of 9 for gold. So
Hey,
that's
Mark,
a true.
has the miners started to become a lot like the oil exploit, like the Exxon? Have they started to become big dividend aristocrats? Because I think that's going to be one of those next phases. They're going to be really good because their drilling cost is really low, so they're minting money still.
Yeah, it's interesting to see where that's going to go. I haven't done a lot of studying on that side of the fence, but yeah, you may be right. You may be right in terms of where things evolve to there. But yeah, I do see. Obviously, you want to make sure companies are, they're healthy, if you will. But I think a lot of mining stocks should show a lot of promise and potential here, riding this massive bull market, and you will see a lot of volatility. You can see the chart that James is showing there of NEM having a pretty decent correction here in the last couple of days, but wait for dips to buy on. We're right up against the what is that, the 20 EMA right there, James?
Yep, the 20 EMA. Yep.
Yeah, and we're possibly in a weekly correction time frame too, so we'll see where that could take us. But so those are interesting stocks to the upside. Very, very near term here, not speaking longer term with energy. I think energy could have some downside with one of them would be COP. I think have a little downside risk. USO, Nike, and Baidu all have downside potential. Nike target I think would be around 52. Baidu also has downside as well. I think that's around, if I'm not mistaken, 77 on the downside. So those are just very near term. Those are weekly cycles. Longer term, gold miners are interesting to be the upside.
Hey,
Yeah.
do you have a favorite gold miner that you look at? Is there one fundamentally you like the most, Mark? Because I really like that
yeah.
play. I think that's a brilliant play.
Yeah, it's a really good question. I'm just really approaching it mainly from a charting perspective, and it's almost like it depends on the week. I mean, sometimes one looks better than the others, and that's
Would
a
it
good
be
question.
easier to just stick with like something like the GDX
It could
instead
be.
of trying to pick?
It could be. Yeah. Yep.
Okay.
Exactly. Get an ETF. Yeah, exactly right.
Very cool. I like it.
Well, guys, first and foremost, I think everybody in here appreciates your knowledge and insights and everything that you shared. For the attendees in here, we're gonna make these roundtables a monthly thing. They may come at the end of the month or the beginning of the month, depending on what has gone on in the month. And I love doing these roundtables as well as these Sunday sessions.
James, we're not going to do it unless I get 70 love it's in the chat right now. I'm never doing this again. And some of you are going to be like, good, don't invite Tyson back. So I want to see 70 love it's right now.
All right, there we got 2. Come on, guys. You heard the man. We need him back. So
yeah,
I better get those love it's in here right now.
If you don't get him, then I'm going to take that as a, okay, Tyson, you've overdone your stay, buddy.
I love it, man. Absolutely. Oh, there goes. Bob won it. He put 70 love it's in there.
There we go.
Look, they're going to be in and they're going to dive in more into charts in the next times. This first time, we just wanted to get, ease your mind, understand direction. Now, I will also let you know that Tyson, Mark, myself, Silas, we're all in webinars all throughout the week. So pay attention to your email. And very soon, just so you guys know, I'm in development on a website where the website is not only going to have where we'll be streaming our Sunday service sessions every Sunday. I'm also going to do a daily session as well in the early morning. But I'm also going to put a list of the webinars and the times where you can see and hear from these experts. Okay, so I absolutely want to make sure that when we get that site out, be reaching out to us. And then the last thing that I'm going to do is this. I started a group Discord. Now, it seems I'm the only one that does all the talking in here, but you guys, I want you guys to get fired up and start to join in on the conversation, ask questions. This will give us opportunities to make our webinars more attuned to what you guys are experiencing and you guys are wondering and things like that. So what I'm going to do right now is I'm going to send this Discord. This is absolutely 100% free to join. join the Discord. The problem is that this link is only good for 7 days. So I'm going to send you guys that link. I just hit send on it. Join the Discord, chat with me, ask questions. They'll be there for you can ask as many questions as you want. I monitor it greatly. I have some other people that help me monitor it as well, and I'll be posting webinars and sessions that I do as well in there. So, look, appreciate each and every single one of you guys for being here. I want to give a special shout out, Mark and Tyson. I really appreciate you. I know Silas, you're gone, but appreciate you as well. And I look forward to seeing Silas and team in live here in Orlando this week coming up for a special mastermind event. So keep anything that you have, you please ask away in that Discord channel. Look forward to seeing you guys in a webinar very, very soon this week, as a matter of fact, and talking to you all very soon. Don't forget, if you guys have any questions about the investment opportunities that I showcased, I'm going to send my Calendly link out again. Book time with myself, Brent, anybody. We're just here to present you the information, and then what you do with that information, that's all on you. If we can be of help, we will be of help. So appreciate you all. Want to wish you guys health, happiness, and success at trading. Have a good one. I'm going to wrap this up now, and I will see you guys in a webinar very soon. Have a great one. Thank you. Bye.